16 assets that you need to buy now that are better than cash. Can you sense it, the subtle shift in the atmosphere? It's the presence of inflation creeping in, sapping the wealth of those who cling to their cash. Only a select few of us truly grasp this phenomenon. Can you also hear its ominous hum? We know you can. Welcome to Penny Investors, where future millionaires come to get inspired. If you haven't subscribed, you are missing out, so please hit that like and subscribe button, and turn on the notifications. Recently, the government officially reported inflation at 3.18%, and a couple of months back it was more than 8%, but behind closed doors, reputable financial institutions have already pegged it at double digits. So the central bank has been increasing interest rates with every change they get. Everyone in the financial industry is warning about the concerning market signals and the impending threat of hyperinflation. Before you dismiss this as a problem exclusive to the US, let's shatter that misconception. Governments worldwide are on a money-printing spree, diluting the value of your wealth, and modern society teeters on the precipice of a financial crisis. So, in this video, we'll explore 16 assets that outshine holding cash as investments. By the end, you'll likely reconsider keeping cash for essentials only and reinvesting the rest. Let's dive in. Number 1. Basically, anything right now. When trust in the monetary system wanes, people flock to alternatives. Collectibles like baseball and Pokemon cards, virtual real estate in the metaverse, and anything with a dedicated fan base can serve as a store of value. Number 2. Vintage wine. Before diving into wine investment, it's essential to educate yourself about the wine market, regions, varietals, and vintages. Understanding the factors that make certain wines more valuable than others is crucial. Some investment firms offer wine investment funds that pool investors' money to acquire and manage a portfolio of fine wines. These funds can provide access to a professionally managed wine portfolio. Given the value of some fine wines, it's wise to have insurance coverage to protect your investment against theft, damage, or loss. Investing in wine can also be a pleasurable hobby for wine enthusiasts. You can enjoy the wines in your collection while they potentially appreciate in value. Number 3. Raw materials. Especially those used in construction, are in high demand. Material stocks like SLVM, FCX, and are gaining attention. Raw materials often have intrinsic value and tend to retain their value or even appreciate during times of inflation. As the prices of goods and services rise, the demand for raw materials used in their production increases, driving up the prices of these materials. Raw materials are fundamental to economic development and infrastructure projects. Number 4. Vintage cars. Unlike luxury tech, vintage cars hold their value well. Special editions and rarities can see significant appreciation. Many vintage cars are prized for their historical significance, unique designs, or innovative engineering. These qualities can enhance their desirability among collectors and enthusiasts. Vintage cars are often limited in supply because they are no longer in production. As time goes on, the number of well-preserved vintage cars decreases, making existing models rarer and potentially more valuable. At number 5. Luxury handbags. Beyond fashion statements, luxury handbags like Birkin and Kelly bags appreciate in value over time. Even more affordable options like the Chanel Classic Flat Bag hold their value. Many luxury handbags, especially iconic models like the Hermes Birkin and Kelly bags, are produced in limited quantities each year. This scarcity makes them highly desirable among collectors and enthusiasts. Number 6. Luxury watches. Craftsmanship, heritage, and scarcity make luxury watches appreciate in value over time. Rolex Submariner, Patek Philippe Nautilus, and Audemars Piguet Royal Oak are some prime examples. Luxury watchmakers are renowned for their meticulous craftsmanship. These watches are often hand-assembled by skilled artisans, using high-quality materials and precision engineering. Number 7. Art. Rich people buy art as a store of value. The price of art never goes down. Platforms like Masterworks.io now allow regular people to invest in art through fractional ownership. Art is a tangible asset that can be displayed and enjoyed. Unlike some investments, owning art provides a tangible and often aesthetically pleasing aspect to one's portfolio. Surprisingly, at number 8, livestock. Owning pigs, cows, sheep, and chickens can outperform the US dollar, especially in developing countries where demand is high. Livestock can act as an effective hedge against inflation. When the value of a currency decreases due to inflation, the prices of essential goods like food tend to rise. Owning livestock allows investors to participate in the rising prices of these goods. Number 9. Precious metals. While not our favorites, gold, silver, and platinum are solid stores of value. When cash is constantly diluted, these limited supply metals offer a safer alternative. Precious metals serve as a hedge against inflation. When the value of fiat currencies declines due to inflation, the purchasing power of these metals often remains relatively stable or increases. Investors turn to them to protect their wealth from the eroding effects of inflation. Number 10. NFTs are more than just digital art. They represent digital ownership, proving you own something on the internet without legal disputes. NFTs have applications extending beyond art, including property rights and royalties. As the metaverse and virtual worlds gain prominence, NFTs can be used to establish property rights in these digital spaces. Just as you can own a piece of land in the physical world, NFTs can represent ownership of virtual land, granting you control over digital spaces and the content within them. At number 11, altcoins. The blockchain world is full of opportunities, akin to investing in Google or Amazon during the internet's early days. Ethereum, Cardano, and others are part of the infrastructure of the new internet. Altcoins represent a dynamic and evolving sector within the cryptocurrency market. They provide unique opportunities for investment, innovation, and participation in the broader blockchain ecosystem. Number 12. Bitcoin, the godfather of inflation hedges. It's the best performing asset of the past decade, and as governments move towards digital currencies, Bitcoin will coexist as a true store of value. There will never be more than 21 million Bitcoins in existence. Inflation erodes the purchasing power of fiat currencies. As governments worldwide implement expansionary monetary policies, printing more money, the value of traditional currencies can decline. Bitcoin, with its fixed supply, is viewed as a hedge against inflation because its value is not subject to such dilution. Next up, at number 13, we have Swiss francs or other superior currencies. Don't stick to the illusion that the US dollar is the strongest. Consider currencies backed by real assets like gold, land, and real estate. Number 14. Land. With the world changing, land is in high demand. People can work from anywhere, making land a valuable asset. Agricultural land prices have risen by 7% in the last year. Land is a finite resource, and its supply cannot be increased. This scarcity makes it inherently valuable, particularly in densely populated or urban areas where available land is limited. Coming in at number 15 are stocks. The stock market is at an all-time high, making it an ideal place to invest. It's where the wealthy put their money to outpace inflation. Stocks have historically served as a hedge against inflation. When inflation erodes the purchasing power of cash, the value of stocks can rise, helping investors maintain their wealth. And finally, at number 16, we end our list with real estate. As inflation robs the value of cash, real estate prices continue to soar. It's a strong store of value, and even the average home price in the US has doubled in the last 5 years. That is it, 16 assets that you need to buy now, that are better than cash. Remember that each of these assets comes with its own set of risks and rewards. It's essential to conduct thorough research or consult with a financial advisor to determine which assets align best with your financial goals, risk tolerance, and investment horizon. Diversifying across multiple assets is also a common strategy to spread risk and potentially enhance returns. If you found this video valuable, don't forget to hit that like button and subscribe for more content on finance, lifestyle, and personal development. We'll catch you in the next one.